All right, here we go. So today I'm reviewing Aave. This is requested by Pieri Chong. Hopefully I'm pronouncing your name correctly. We'll be reviewing Arweave after that, as per his request. If you want me to review a cryptocurrency, leave a comment in the comment section below. I am an honest reviewer and I go off charts mainly, a little bit of fundamentals, but really charts because at times like this, charts are really good because they will tell you where we're at the moment, some stop losses in place. Of course, hopefully we know by now we need a plan. I'm going to say this at the start of every single video. Any sort of altcoins should be traded. That means you get in and out. At the moment, most of the market is giving about anywhere between 15 to 30% returns. 10% seems to be a bit more on the low end, but definitely attainable. What I'm trying to say is don't get too unrealistic with your targets. I know that cryptocurrency can give you some mega gains, but this is not the time to start hodling some altcoins for the next bull run. I will do my very best when the next bull run starts to look at breakouts, to see which cryptocurrencies have the most volume and start pushing, and those will be the market leaders. But I can't give you that information now until I start to see it on the charts. So for now, 10, 15, 20, 30% is what I'm happy with. That's what I think people should be taking, not financial advice. But I just want to stress the importance this is not the time to start hodling a coin. Just because a coin is doing great now doesn't mean in 24, 48, 72 hours it can do very poorly. It can. So always have a plan, and I'll do my best in all of my videos to give you a nice well-rounded plan. Okay, so we're talking about Aave. Now, this is a cryptocurrency that has really got hit pretty damn hard. Like a lot of cryptocurrencies, but Aave was doing very well in 2021. Hit the amazing price of about $670 back in May 2021. So again, this is why I say don't hold these coins because you never know. You never know if this coin will get there again. You never know. And you do not want to be holding these bags hoping that, oh my God, is it gonna hit $640? And then you see it go to 400, 300, 200, 100. If you're still watching crypto videos now, this is a learning lesson for all of us that, hey, cryptocurrencies, altcoins can keep bleeding on. It's not to say Aave can't go down to $10 and stay there for 5 years. It can. So again, this is just a trader's market, and this is the way I would approach it because I really like this one as in terms of a potential trade. For now, as of recording this video, so we've got our 50% perfect bounce off. So you know how much I talk about this yellow golden line. As usual, big shout out to Michael and Jason Pizzina for their videos. They have really helped me a lot. And you can see the 50% coming in at $61.80. Perfect bounce off of it. And that's what you're looking for. But if you know my channel, you know how much I talk about volume. You need that increasing volume to show that there's interest in this party. I promise you, you will find it very hard to make consistent profits if you don't have volume. You need volume. It's probably one of my top 3 favorite indicators because you need that energy. You need that volatility. You need people pushing up the price. Even as I'm recording this, you can see that the price is fluctuating and moving. It's not just staying stagnant. It's also on Binance and it also has the trading pair with USDT. So you need volatility. You need to get in at a good price and you want to get out at a good price. That's what volatility does. And Binance has really cheap fees as well. And that's why it's one of my preferred platforms when it comes to trading. But this isn't about Binance. This is about Aave. So like I said, perfect bounce off the 50%. Of course, we'll probably have another attempt near that $75 mark. So this is what I mean by it's a market of about anywhere between 10 to 30% returns. If you go from near the 50% mark, let's just say you go for about $63 and you go near it, there's your 20% return at about $75. I wouldn't be trying to get too greedy and trying to, time it at that exact top and hope for a double top to play out. I've just seen it so many times where you get sort of a lower high put in. So you get something like this and this and this and this, and you could have had this, but because you wanted this, you ended up, getting lower and lower and lower. So hopefully that makes sense. Basically, don't get greedy with your profit targets. Put a stop loss in place. Where is the stop loss? This is a question I'm sure most of you are asking. Where do I place a stop loss? I don't know. The way I like to put stop losses generally is I like to put it in the last breakout if there was a breakout. And you can see that's your breakout, 21st of June. You had very high volume, a bit of a weak close, but high volume nonetheless. I do classify that as a breakout. And you can see we had high volume on the 19th and the 20th and the 21st. The volume got increasing, but this is the last breakout. This bar is the last breakout, this bar. So what are we going to do? We're going to put our stop loss right underneath it. So my stop loss would be around $58.06, give or take, doesn't have to be exact, but right underneath that previous breakout. And that gives me a nice good buffer. Should it go against me, I'll be down about 8%, 9%. That's not bad for cryptocurrencies. Some people don't like stop losses because they get false breakouts on the downside or the upside. They get stopped out of good positions, but they're there for protection. You need to protect yourself because you don't want to be sleeping and just see a market dump off and be like, oh my God. Again, you do not want to be holding bags for years, guys. Like look at those people holding XRP for years and watching BitBoy's videos, hoping for XRP to go up to $5 and whatever ridiculous price they bought it at years ago. You do not want to be that person. You don't want to be holding those bags that no one wants, hoping to God the next bull run will pump your crypto up. always have a stop loss. You can get back in should the trend reverse. That's my yippity yap for now, okay? But let's have a look at the 4-hour charts just so we can get a bit more of an intraday picture of what's happening. So look at that perfect test on the breakout. I didn't even look at that on the 4-hour chart till now. So you can see I placed my stop loss pretty well, actually right underneath the test areas right around 20th of June, 21st of June. And there's a huge volume bar on the 21st of June at 10 o'clock. That's Australian time. And then you had the pullback, perfect bounce off the 50%. This is why I love the 50%. Look at that. Name me any tool that will give you a bounce off that accurate. It's not to say it always will be. Remember, guys, trading is a probability game. It's just probabilities. How sure are you right? How sure are you not? It's just like a construction person with his tools. These are our tools. These are my tools that I use. Again, big shout out to Jason and Michael Pacino for sharing those tools. But you're just saying, okay, generally a bounce off means we're going to have another rally. So there you go. And now you maybe get another rally. There's your 17% return. That's how it is. Maybe you want to use a little bit of leverage if you're an experienced trader. Again, not financial advice. Stop loss underneath. So your risk to reward ratio is about 8% down to about 18% up. That's pretty good. That is very, very favorable. And likewise, maybe it breaks and you go, okay, we're just below the 50% mark. That's okay if it breaks. It doesn't mean it's weak. It just means it's testing these areas. But should it break these areas, you might want to leave your trade. Maybe it runs past you and you're like, oh my God, I should have not. That's the name of the game. All of these emotions of fear and greed and hesitation and taking profits, they're all part of the game. This is how hard it is to really prepare yourself mentally for trades. Again, I would not be holding this coin for 10 years, 5 years, 3 years, 2 years. I wouldn't be hodling this. This is not a time to be hodling altcoins. They are very risky business now, and you can just see how quick and hard and fast they fall, and who knows where Aave is going to be in the next bull run. But let's compare Aave to its Ethereum and Bitcoin value to see the relative strength against them. So here we go. We have Aave against its Ethereum value. Ethereum has been getting hit pretty hard at the moment, so it's not hard for an altcoin to outperform Ethereum, generally speaking, at this point in time. But you can see Aave has, in a downtrend, has actually been underperforming pretty substantially. So hopefully that chart is just looking like a pretty big downtrend. This is why don't hold your altcoins, don't hodl them. Ethereum, Bitcoin, even though Ethereum is getting hit at the moment, they are still very good risk-averse cryptocurrencies. For crypto standards, not by asset class values, but by crypto standards, they are safe, relatively low risk, good yielding returns for Bitcoin and ETH. So we compare them against ETH for this chart, and you can see Aave doing very, very well on the 100-day moving average, dipping below it. But you can see I've drawn my trend lines. You can see a bit of false breaks on the trends before ultimately coming up on high volume. This is a pretty nice, clear uptrend happening at the moment. So outperforming ETH, breaking trend above its 50% target, looking incredibly strong moving forward. For now, like I said, stop losses on everything because this trend can reverse. But for the now, you're seeing there's your pullback, nice good test on the trend, up, another test, bit of a false break out of it, but now break the trend on the upside on good volume. We're ready. We're going to be moving in a couple of days. But like I said, stop losses in play. And now we have it against Bitcoin. Bitcoin has been doing very, very well, but you can still see that the trend is overall down against its Bitcoin value. And this is why it's just a trader's market, because you're just trading within, and you can see we're just trading between a very short range against its Bitcoin value. Good, strong volume, hanging on to the 50% at the moment. That's okay. There's a bit of leeway there. 100-day moving average will be a resistance area, and you can see that was perfect resistance almost on the 21st of June. And there you go. Against Bitcoin, about 18.9% away to get some nice, good, juicy profits against its Bitcoin value. So that's some of the ways I look at cryptocurrencies, guys, in terms of trading. I compare them to Bitcoin, ETH. I look at them on a chart, but I need volume and I play around the 50% trend. I'm going to say it again, guys, always use stop losses. It's still a very uncertain time in the market. I've given you some stop losses. It's not financial advice, but it's just something to look into. Good volume. This looks like one of the more promising cryptocurrencies for the next few days. Again, see how it goes. Stop losses in place. Don't get too greedy with your profits. But I hope this video helped. If it did, drop me a like, give me a subscribe. And until then, everyone, I will catch you on the next video.